One of the biggest lies banks tell us about growing wealth. Have you ever been told that the best way to grow your wealth is by keeping your money safe in a bank? For years, this has been one of the biggest lies we've been fed. Banks proudly advertise interest rates, promising that your money will grow over time. While it's true that your account balance may increase in number, the harsh reality is that your money's true value is constantly being eroded by inflation. With inflation soaring and bank interest rates failing to keep pace, keeping your money idle in a bank account is like throwing it into a fire. It disappears faster than you can imagine. So, how do you protect your hard-earned wealth and create financial stability, not just for yourself, but for generations to come? In this video, we'll uncover 6 powerful assets that can stop your wealth from eroding and help you build intergenerational wealth. By the end, you'll understand how to make smarter decisions with your money and finally achieve financial security. Let's dive in. 1. God's money: gold, silver, and platinum. Throughout history, precious metals have been a cornerstone of wealth preservation. While governments today print unlimited amounts of money to cover their deficits, metals like gold, silver, and platinum remain finite, making them incredibly valuable. Why is gold called God's money? Because it's a universal store of value. Unlike paper currency, which governments can devalue overnight by printing more of it, gold's worth is intrinsic. It's rare, tangible, and cannot be created out of thin air. Let's look at the numbers. Before the 1950s, you could buy an ounce of gold for $400. Today, in 2023, that same ounce is valued at over $2,000. But it doesn't stop there. According to Prime XBT's gold forecasts, gold could rise to $10,000 per ounce by 2032. Imagine that, your investment multiplying 5-fold in just a decade. Silver and platinum follow a similar trajectory. These metals don't just hold value, they also have industrial applications, making them even more desirable. If storing physical gold isn't your style, consider investing in gold ETFs, exchange-traded funds. These funds mirror gold's market value and make investing easy and affordable for everyone. It's a way to safeguard your wealth without the hassle of physical storage. 2. Industrial commodities: raw materials that power the world. Precious metals aren't the only materials that can preserve and grow your wealth. Industrial commodities like cobalt, nickel, and copper are equally essential. Take cobalt, for example. The demand for this metal has skyrocketed since 2020 due to its critical role in producing batteries for electric vehicles. Its price rose from $20,000 per ton in 2012 to $40,000 per ton in 2022. A staggering 100% increase in just 10 years. Why does this matter to you? Because when industries grow, so does the value of the raw materials that fuel them. Investing in industrial commodities offers a way to capitalize on global trends, like the transition to renewable energy and electric transportation. Now let's be realistic. Most of us can't afford to buy and store large quantities of these raw materials. But here's the good news. You can invest in mining companies, commodity-focused mutual funds, or even derivatives like futures and options to gain exposure. Companies like Rio Tinto and funds specializing in raw materials can help you benefit from these booming markets without needing physical storage. 3. Safe haven currencies: a lifeline in times of instability. In today's volatile world, where geopolitical conflicts and economic uncertainties dominate headlines, safe haven currencies like the Swiss franc, British pound, and Chinese yuan can be a refuge for your wealth. Switzerland is renowned for its stable economy and neutral political stance, making its currency, the Swiss franc, one of the safest in the world. During the 2008 global financial crisis and the 2009 Eurozone debt crisis, countless investors moved their money into Swiss francs to protect it from currency depreciation. Here's a quick example. In early 2023, the Swiss franc was trading at 1.1074 against the US dollar. For those holding Swiss francs, this meant a significant boost in purchasing power overnight. But what if you don't have access to Swiss bank accounts? Don't worry. You can invest in currency ETFs or use Forex platforms like Forex.com to gain exposure to these safe haven currencies, starting with as little as $100. 4. Sovereign guarantees: the safest bet in a risky world. Ever notice the phrase on your dollar bill that reads, "This note is legal tender for all debts, public and private"? Since 1971, when the US dollar stopped being backed by gold, its value has relied solely on the faith and credit of the US government. This is what we call a sovereign guarantee. Your money is only as secure as the government that backs it. Stable governments are unlikely to default, making their securities one of the safest investments out there. For US investors, Treasury securities like T-bills, notes, and bonds offer a way to invest in the government's strength. These securities are safer than cash in a bank and often provide higher returns. Plus, they're accessible to everyone. Small investors can buy them directly through Treasury Direct or on secondary markets. Important tip: stick to securities issued by stable governments with strong credit ratings. Remember the 2009 Greek debt crisis? It's a stark reminder to carefully evaluate the financial stability of any nation before investing. Number 5. Value stocks and dividend mutual funds. Stocks have long been one of the most popular ways to grow wealth, but not all stocks are created equal. While growth stocks like tech companies offer high potential returns, they also come with higher risks. For a safer approach, consider value stocks, companies with strong fundamentals and steady demand. Take Nucor Corporation, for instance. This industrial metals company has been a reliable performer for decades, offering both price appreciation and stable dividends. But let's be honest, researching individual stocks can be overwhelming. That's where dividend-focused mutual funds come into play. Funds like the Vanguard High Dividend Yield Index Fund allow you to diversify your portfolio and earn regular income without the hassle of picking individual stocks. Number 6. Land and real estate, the ultimate inflation hedge. If there's one asset that has stood the test of time, it's land. It's scarce, essential, and always in demand. From homes and schools to factories and commercial spaces, land underpins every aspect of our lives. Did you know? Housing prices in the US have tripled between 1992 and 2020, according to Bloomberg. Even after the 2008 housing bubble, real estate has proven to be a resilient and lucrative investment. But here's the kicker. You don't need millions of dollars to start investing in real estate. Real estate investment trusts, REITs, are a fantastic way to gain exposure to the property market. REITs like Ventas Inc. (VTR), which focuses on healthcare properties, allow small investors to earn rental income and benefit from property appreciation. If you're more hands-on, consider buying rental properties. The rent you collect can cover expenses and mortgage payments while also generating profits. Number 7. Collectibles, rare and timeless investments. Finally, let's talk about the most unconventional asset class, collectibles. From vintage cars and rare art pieces to handcrafted luxury handbags, collectibles are a unique way to store and grow wealth. For example, in 2022, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe sold for an astonishing $135 million. Similarly, Leonardo da Vinci's painting, Salvator Mundi, was purchased for $450 million in 2017. If you're an average investor, these prices might seem out of reach. But platforms like Masterworks and Conveying allow you to invest in fractional ownership of collectibles, making this asset class accessible to everyone. Conclusion: secure your financial future. In a world where inflation is eroding wealth faster than ever, relying on banks to grow your money is a losing game. Instead, consider diversifying your portfolio with assets like gold, industrial commodities, real estate, and even collectibles. Remember, wealth isn't just about preserving what you have, it's about growing it for future generations. The sooner you take action, the better equipped you'll be to achieve financial freedom. At Finance Compass, we're here to guide you every step of the way. Don't let your hard-earned money go to waste. Make it work for you. If you found this video insightful, don't forget to like, subscribe, and hit the notification bell. Share this with someone who needs to hear the truth about banks and money. Together, let's build a financially secure future.